Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, November 17th. And looking at the markets here, you get your predicted oversold rally, right? Oversold bounce. Going into Friday, professionals are going to cover shorts. That's just what they do. And they happen to do it at a pretty good volume level. So originally I was looking for this point of control to hold around 1360. It did for a couple of days, and then eventually we pierced it. What happens? We go down. You can see heavy volume right here around this 1340 level, just below it. And, from there, volume really trickles off and doesn't get heavy again until another 10 points or so lower. And then you could argue it really doesn't get heavy for another 20 points around 1320. So what we're looking at here in the S&P is an S&P bouncing where it should. Now we bounced right up to the 1-year point of control. That could provide for resistance, but if we do get above that, then we have to look at some levels above, and I would be looking at this 1370 level, about 10 points above from where we are now. That's the top of this heavy volume. But if you want to get a little more accurate, we can look at what's going on in an hourly chart in the S&P. So what we effectively did was come down, almost close this gap. It came down to this basically zone here where you had the point of control for the month of July and this gap down here. I know it's tough to see on this bottom left. And we basically stabilized at those levels, and now we're looking at some type of reversal. Now whether we see that type of follow through remains to be seen, because going into the Thanksgiving, the shortened week in the markets, you're either going to see one of two things: light volume and consolidation. You could see a potential sell-off, but I would be more inclined to see some type of rally, some type of push up towards the point of control for the current month. And look at this big volume down here. Price will probably be attracted to that. That's around that 1370 level that I was just mentioning. So just keep an eye on it and realize that we could easily see a move up to those levels. Let's go on and show you the Nasdaq. A similar picture. We're coming down to where we should bounce. We're at the value area low for the year. Now, we broke a lot of major technical levels on the Nasdaq, and obviously you can thank Apple for that, as we'll get into that in a second. But you're at a level where you have defined risk, at a level where the Nasdaq, has bounced multiple times. Here we are again. And one thing that's good, and it doesn't necessarily mean that the selling's over, but you have a lot of heavy distribution days where, down days on big volume, and now we're seeing a reversal at the value area low. That doesn't necessarily mean, okay, the coast is clear, but at least we have our risk defined, or the buyers have their risk defined to the downside. And you'd be looking at 2,500 or so on the Nasdaq futures. Any dip below that, then we're testing the lows, 24.92, and then potentially making new lows. But similarly, looking for some type of retracement, 25.80 or so would be your target on Nasdaq futures going into the holiday week. So you could easily see some type of melt up, and that's important to recognize. That's important to figure into your trading plan, especially if you have a big position in this market, whether it's a net long or net short, and only you can answer that question. All right, Russell 2000, similar situation. I'm looking at this volume here, basically right at the value area low, and it's basically where the Russell 2000 bounced from. So you get more of the same, and all you're looking for now is to see, okay, will this Russell bounce? You basically have a triple bottom here, and now you're looking again for a retracement up to where big volume is. If we get above, or I should say if we continue to hold above, call it this, let me draw it, 1775 level, basically where we closed on Russell futures, then you have a chance to really close this low volume and go and test a 790. That's a pretty good bounce, and basically what we're looking for is, will the market do just that? And if it does, it should provide for decent opportunities in this market for a short-term gain. It's all going to be dependent upon how the market trades on Monday, but hopefully you did take some risk on to the long side on Friday. One thing to note also, and I continue to come back to this because it continues to work. The volatility index, where is it right to be a seller? Okay, 18.5. Where were we on Thursday? Early morning, late morning, early afternoon. That 18.5 level, where did we sell off from? You betcha. So where are we coming back down to? We're coming back down to the levels where, let me zoom out. You have the 50% retracements, and this is really valuable information for you. 50% retracements for August, September, and October, all in the 16.5 level. Where have we bounced every time? 16.5. Where are we coming down to? 16.5. So keep in mind this zone where you could see the buyers of volatility once again come in, where you'd see another market decline. So keep that in mind. Write it down. Put it on your screen. Hey, volatility's at this low end of the range where it's been right to be a buyer volatility, a seller of the S&P 500. Again, keep it in mind. Okay, now let's go into some ideas for the market. And right now we're looking at Apple. And of course, you have to bring up Apple, right? You had the huge reversal off of those 505 lows or so. Yeah, 505.75 was the low in Apple. Now, if you're looking at this objectively, what do you say? Well, since basically the beginning of November, which really goes back to this day up here, this little reversal off of the point of control for the year, you see the continuation to the downside, right? It gets steeper starting on the 7th, and you see your continuation. We are still in that downtrend. There's no doubt about it. And then from when Apple really started to break, we are still in that downtrend. There's no doubt about it. However, with this reversal pattern, now you're in a situation where you can say, okay, these lows from let's call it 521, back in May, the 18th of May was the exact date. Now we're looking to kind of see if that's going to be support in Apple. I also have a cool other chart that I want to show you. Alright, here we are. Now this is going to be a little confusing if you don't recognize this chart, but what you're looking at here is a monkey bars, normal monkey bars chart, right? Also known as like market profile or something along those lines. What you have is the 1 represents the first hour of the day, the 2, 3, 4, 5, 6, 7. You get it, right? What you're looking at is the 3s. When the market bottomed, we did not retest that level. You see the 2s and the 1s, but the last time, or the lowest we got after that was 517 or so, where you see 1, 2, 3, 4, 5, 6, or excuse me, excluding 5. And other than that, you have 1, 2, 3. So here, let me draw, and then that would probably make more sense. So you want to mark the 3s, and you want to mark the 1, 2 under the 1, 2, 3, 4, 6. So about 117-ish, and then 112. I would consider that a zone, a buying zone. You look for the buyers to come there if we dip below that. If we don't, and we stay above 517, you're looking above this 1, 4, 5, 6, 7 zone, basically 530. And from there, it could get aggressive to the long side. We probably immediately go up towards 540. And from there on, then you're looking, to test basically anything north of 540. But that just kind of puts it in perspective on what's going on with Apple. With this bar, again, 517 down to 512, that's your buy zone. That's where you're looking for this market to hold, or I should say Apple to hold. And from there, you want to see it, for example, break this trend line, then go and test this trend line. I'm sure, there's a large group of traders that use the 10-day. You also use the monthly point of control around 545. These are all levels that you want to be watching. But again, we get above 530, and this Apple's going to immediately pop $10 more, excuse me. So just keep that in mind and use it to your advantage. All right, let's no, not OM. I want to show you ExxonMobil, and the reason why is because here we are. Let me get rid of these trend lines. We're bouncing off the point of control for the year. Just keep it in mind. It could be a good opportunity, for a trade back up towards 90. And I think that you want to keep it on your radar. If we do see a bounce in the market, you could see ExxonMobil bounce with it. It's just a good, strong test of the point of control for the year and a bounce. So just keep it in mind and use it as a reference. All right, gold. Wow, I have a lot of levels here. So let's simply break it down, right? You have, no, not Fibonacci retracements. All right, you have this support level, which was support late in October, which was breached in November, basically the election where you saw a reversal. Now we're trying to hold those levels. You also have this downtrend, which remains to hold, this downtrend line here. It's also, the highs were in agreement with the 50-day moving average. You also have the point of control for the year, which is showing a little bit of resistance also. You basically keep this in mind. 1700, will it hold as support? If not, your target 1680 or so to the downside. The way I would be playing it is through GLD. I'd be looking at put spreads. So if we break those levels, then you would be looking, for example, at like the 165 by 163 put spread, something along those lines, and you would go pretty short dated, at least December, and you'd look for a downside move in gold. If 1700 holds, I would wait for this trend line to be broken to the upside, so let consolidation pan out and see what it does. But again, if 1700 breaks, now you may get a little snapback, you may not. But I would be looking to target 1680 or so on the downside for a short-term trade, just momentum pushing down, which then means we have to go into what the dollar's doing. The dollar is being rejected off of this resistance level. Basically, you saw a fake out to the upside, and that's why a lot of traders use the closing price as to determine if a stock or whatever breaks out or confirms levels. It's because anything can happen intraday. So you saw the breakout on good volume, and that's probably shorts getting squeezed near the top of the range, and or speculative shorts. And then you see the reversal off of that. What did we reverse off of? Well, you see this big high volume here from back in September. But what I'm looking at, and that's clearly where the dollar was looking, was the value area low for the prior month, August. I guess I'll zoom out so you can see it. The value area low for August, 81.51. We draw a line straight across. 81.51. Let me zoom in here. Where were our highs? Oh, 81.51. So that's pretty interesting, right? So keep that in mind. Use that as your bogey. It's pretty clear that the dollar's in an uptrend. Your next target to the downside is around 81.07. That is in agreement with a market with an S&P that wants to go test 1370 or so. It's in agreement with a VIX that continues to be sold off whenever it sees any type of rally. So just keep that in mind, and you want to use it to your advantage. So we went through, silver, just bouncing at the point of control for the year. I would just use gold as your play. Oil, this is probably going to bounce. Keep it in mind, have a pretty good day on Friday. But what you're seeing is with all the Middle East tension, you have your little uptrend line here. However you want to draw it, you have resistance here where it was only breached for 2 days at a time, but the next day closed down big. If we break above 87.50 or so with volume, then you're going to go test probably $1 up or so. I would be looking at these highs here around 88, 80 to 89, 25 or so. That's your little zone. Top of the Bollinger Bands, these highs. 50-day moving average is coming down. Value area low for the year. You have a lot of levels there, and that would be your first short-term target. From there, I guess it wouldn't be fair to not look at. I'm just going to get rid of all these. All right, so what it actually looks like is a potential bottoming in oil, point of control for the month, down at this 85.25 level. Now we're pressing above, So yes, I would be looking at this 88.75 to 89.25 level, the value area low for last month, 50-day moving average, and then from there, if we do get above that level, I mean, then you're looking at 90, 91, and ultimately 91 to 93-ish as your target. And what I'm looking at here is just the big volume chunk from last month, and I'm also looking at that point of control for last month. That is usually a magnet for some type of retracement, so just keep that in mind and use it to your advantage. So really, that's it. The euro, the last one. The euro is balancing at this point of control for the current month that's formed. I do not like using current month data. However, given that we're going into a holiday weekend, traders could be using it more and more. If we do see any type of retracement, your first target would be the intra-month value area high, which is around 128, where you have a lot of potential resistance there. You have big volume that just really peters off there. Swing highs, 20-day, 50-day, average true range, everything's right there. So you're going to see a lot of resistance. And if we do break above that, then you do have some more resistance around 128.65 or so. And then from there, 129.66. If we fail from those levels, then you're looking down to this volume chunk. Basically call it 126 is where you'd be looking. So anyways, I hope this helps. I hope it gives you an indication of where I'm looking at in the market. Did place longs on Apple on Friday. That was my only new position. And the reason why was because I can define my risk, and that's what I want to see. So anyways, take care, have a great weekend, and I'll talk to you next time.